Hey, welcome to Mortgage Minute. Wanted to give you a quick update. Last week we talked about the Bank of Canada came out with the rate announcement. In fact, they didn't make any change, but they indicated they're likely to make changes in July and December. And if you listen to my interview on CTV, which we'll give you a link to that here, we talked about the fact that it's quite likely that you should brace yourself for a 4% prime rate. So if you're doing your math and you're wondering, should I lock in, should I stay floating, and of course we had the big rate discount of prime minus 1% last week. That makes the math interesting. To make it simple for you, just assume your prime interest rate is 4%. Now, having said that, we see things like this. Be prepared for trade war talks. I thought this was an interesting, one of these great headlines that shows a picture from the 1930s, right? You know, so say, oh my God, the trade lords are going to put us back to the dirty 30s. It might. Now, you never know. But that's the only thing that will prevent the Bank of Canada from going ahead with 2 consecutive rate hikes. And, of course, a lot of this is unpredictable. We can make our guesses, but there's a lot of, I always like to say, we're one Donald Trump tweet away from all bets being off, right? So in the meantime, if you're looking to do something in the real estate market, here's a headline that I thought was very timely and very good. Parents lend buying power to their kids. I think we live in a very interesting period right now because, you know, we've got all these value house prices going up and up and up in Vancouver and Toronto. Some parts in Alberta you're going, yeah, we're not seeing it here. But in Vancouver in particular, there's the parents are the ones who have benefited from a rise in real estate values. Now the kids are going to university. This could be a great time for you as parents to get into the housing market from a rental perspective and help out your kids by buying that place for your son or daughter to go to school at, buying them a rental. Here's an article, it's the same article actually, says, I know people who made more money on their condo than on the price they paid in tuition. So, gambling a little bit on equity appreciation, but there's one way of utilizing this great real estate market we're in. It's expensive, but your kids still have to pay for housing costs to university, so why not own it? And besides, maybe they can get 6 or 7 other friends to help pay for the rent. On that note, on the flip side, the opposite side, I had a conversation yesterday with a couple that were in their 70s, and the wife was literally saying they're equity rich. They own their home free and clear, around $800,000 on their home, but she had trouble paying for some dental work. So again, as they moved into retirement, their pensions aren't quite where they were. They're equity rich but cash poor. There's a thing called a reverse mortgage. Now, it had bad rep in the past because it was high interest rates. The interest rates on reverse mortgages have come down significantly. So if you are or know anybody who is in a situation where they're a senior, have to be over 65 years old, and they have equity in their home and they're struggling financially, please ask them to talk to me, because the reverse mortgage is a tool that more and more people should be taking advantage of, but there's very little knowledge on it. And lastly, I just want to pull out one last article that says, brace for volatile summer, Wall Street strategists suggest. And basically, again, in the era of Trump and trade wars and tweets and all this, the markets seem to react almost daily to what Donald Trump's doing. So the bottom line is we're going to have volatility. This is one of the reasons why we strongly recommend, take about 20% of that money that you have exposed to the stock market and put it into non-correlating assets such as private equity. And again, if you'd like more information on that, send me an email, and we're more than happy to do an overall analysis of both your real estate and your stock and retirement portfolio, and look at it all and help make sure that the decisions you're making today are going to help you not just today but also in the future. So send me an email, peter@peterkinch.com. Thanks. That's the Mortgage Minute for this week. Bye for now.